Hey there folks, thanks for taking a few minutes to look at this video. On my blog I've got a link for a free trading system. It's for the Dowie Mini 5-minute chart and for the Euro US dollar daily chart swing trading. So I thought I'd go over the since April to see what's been going on. Now we've had a big down move prior to when I'm going to start this in March. So that was a no-brainer for the free strategy to make profits. So I want to start when it's not too pretty, and that starts around April 9th, 2013, and just to see how everything does, because we walk right into a choppy session. So I think that'd be a great place to put it to the test. Now, obviously, if you do pick this strategy up, I highly suggest that you do your own testing on it. Go back for as much data as you can get. Okay, that's one thing you want to do, and then forward test for a little while, and the demo count. So we're going to start here. It's the first setup. This is the trend jumper. This is the free version. Okay, and this all comes. You got the calculator here that types out your entries right here, your stops, your profit targets. As you'll find out in the training, there's a video-based training, and there's also a PDF you can download. You're looking for the second target, which is this right here. There is some trade management input that shows up in the PDF. For me, these are mechanical systems, so I don't believe in 100% mechanical, and you also have to keep in mind just how the market works, okay, and psychological levels, etc., etc. But I'm going to show you as I go through this, okay. So here's the first setup right here. I guess I could bring up the data window. 1 second here, so we can get a bit better information, so I can tell you what I'm looking at here. There we go. So on this first trade right here, the entry is at 31.13, which is right here. There's no adjustments really on this one. It's already above the 3100 level, so you just go into the trade, and you can see right here the first target, and that's where you start doing trade management, is at the first target. The first target's at 3210. 3210. That's right above the round number of 3200. And what usually happens at those areas, the 3200s, 3100s, etc., is you're going to find orders. And you'll find a lot of times what happens is price gets rejected at that. You know as well as I do that at these prices, a lot of times the market will reverse, and other times it'll bust through, right? So the adjustments happen at the first target. It actually says in the manual 10% past the first target. Well, for me, that's just too much thinking. All right, 10% above the first target. Yeah, you can eyeball it, but you know what? I'm not going to. I'm going to let the price tell me what to do, and I'm also going to let where we are in the price tell me what to do. So we're coming to 3200. Now this candle actually gets to the high of 3200, right on the button, right? For me, this is where you're going to adjust some your stop. Okay, and as you'll find out in the manual, it tells you you can either trail this blue line or use candles. For me, I'm going to use candle. That's just better for me, I guess. I don't know. It's just my experience is use price as much as you can, right? Use the actual data, the price data, as opposed to indicator data, which is price from the past. So anyhow, this first trade stops out on the trailer for minus 91. Okay, now you're thinking, oh, the first trade's a loser. Look, if you think you're going to get 100% winners in trading, you're mistaken. Okay, the probabilities of losers in a row, 3, 4, 5, it happens. Okay, and you have got to have your risk management. How much you're going to risk per trade, capital exposure per trade, and if you don't have that down, if you're out there risking 5, 10, 15% on a trade, you're not going to last. It's that simple. So anyhow, our first trade, we're going to lose 91. Nothing you can do about that. It's going to happen. I'm not making this pretty, right? I don't get paid for this. If you get this free strategy or not, I'm just putting things out there for you. Then we have a short trade, and here's a stop right here for minus 119. Now here's the thing. You have a swing high here above this high, right? You got a high. Bit of a pop down here for a higher low than this one here. and then you've got another higher high, and then it gives you a short setup. Think for a second. Would you take that trade? Okay. Also, you're looking at the trend here, the yellow line. In this area here, especially right here where the trade sets up, is sideways. Are you going to take that trade? If you do take the trade, you're going to get stopped out for 119. If you don't take that trade because you're saying, okay, I know it's a mechanical system. I know everything's plotted out for me. I know my stop is here. I know my entries here. My targets are all plotted out for me. Your second target right here. Don't worry about the third target. Okay. What are you going to do? Right? You're going to let the mechanical strategy tell you, or are you going to let what the market's doing? Are you going to let that tell you what to do? So, you've got some choices to make. But I'm going to, just show what the chart's showing right now. And it's going to show you out for minus 119. And also, even though it's here, here's the entry here, right here. You got the swing low here. You're basically taking a breakout of this. And as you know, more times than not, breakouts fail. They break out like you see happen in this area here, and they pull back. All right, so that's entirely up to you. For me, this was a low. This trade was fine. I got no problem with this trade and this loss. This trade here, that's something you could have stood aside on. So now we're going to keep on going up here. We've got the entry right here on this trade. The entry on this one is 31.27. Again, here's our first target. First target's at 32.49, so 32.50. You're looking at 25s, 50s, 75s, double zeros. These are all, every single one of these are numbers you got to keep in the back of your mind. But regardless of that, as you know, it says in the manual, well, you don't know, I just told you, but anyway, it says that when you're 10% above the first target, take action with your stop. Like I said, that's not for me. I look at the first target at 32.50 or 32.49. This candle comes up as high as 32.42. However, the story is not how high this candle comes up. The story is this candle, period. Look at the shape of this candle. So we have a shape of this candle, which is obviously a reversal candle. As it pops up above this area that was rejected, as you can see by this green candle, the white candle here, was rejected pretty strong. Right? So what could you say? What is that? Right? I hope you're saying it's a resistance level. Exactly. For me, it's close enough. The candle's telling me a story, out for plus 28. All right, there's no other way I could do that. Considering I just saw this trade fail, I see this resistance area up here. The candle tells me a story. I take that. Then we get here on this trade here. What you're going to see is the market's going to come down nicely, come to our first target, right? Trailer is the candle that comes into the first target. That's closed below this blue line, the blue-red area, right? Just above that. And you get this little one here, this little candle here, which would have given you an extra 43 pips, sorry. However, I put it at the top of this candle here, right? Because I wanted to make things worse case, worse than they really are. So on this trade, you get a plus 110, okay? So far, we have a loser, winner, small winner, and a pretty decent-sized winner. Once again, this trade here, this trade right here, I don't like it. There's absolutely no way I would have taken that trade. It just wouldn't have happened. Right here. But that's a thing you're going to have to decide for yourself. All right, I want to trade less. And when the price is showing you this, see all these small little candles here, right? And this is a daily chart, okay? When you see these small little candles, what's that telling you? Right? Considering you have these big ones here, you get these small ranging candles. That's not small ranging, but small range candles. There's not a whole lot of juice in the market. So that with the rejection, with this trend indicator telling you that the market's flat, market's still making higher highs, what are you going to do? For me, if you're just looking at this, I would just go, okay, well, this yellow line here is pretty much flat. Small ranging candles. Like I said, you do your own testing. I don't get paid for this, so whatever. Anyways, no trade and cancel in this one. You do get the setup here, but the trade gets canceled when this white candle here closes down in this area right here, below this these lines here, the jump line. Okay. Come back around with this trade. Nice, easy trade for a plus 211 pips. Sorry. You can scale out at the first position, second position, and just trail up if you like. I would only do that if the market's already showing that it's going to start trending nicely. Like I would need this, I'm going to pull back and then keep moving. But it just gets really ugly, this whole chart. Come over here. We've got the short setup right here. The entry price is 30.45, already below the 50 level. Right? Nice big candles coming down through it. No brainer trade, right? Plus 160. So this trade would take how many days here? About 9 days you'd be holding this position for. Then we come back around. We've got a long trade here. Okay. Entry is down here at 30.89. There is adjustment around the 3100 level, but that's 11 pips above. If you're trading one standard lot, not saying you were, and you're trading, you're going to move at 11 pips. It's a pretty big chunk of change, over $100 you've just added. So every time you move your your entry up, you still have your stop sitting down here. All right, so you're skewing the risk to reward. And a lot of times, that's not a good idea. You know, that's what I found anyways. So we got the 150. And we're going to come back around here, getting this trade here. Boom, stops you out for 136. Now this trade comes up. The target on this one is 34.32. The high on this candle is 33.99. I couldn't find a reason to adjust this. You know, you kind of get an inside candle here. But there's nothing I could have done here. This trade is a no trade simply because the way this candle closes before it gets triggered in. It goes above these lines anyways. And just by looking at the chart, again, you know, don't trade blind. I can't say that enough. Just, you know, look at this yellow line. Oh, look at this yellow line. That's a pretty bad tracement. You see it's going up, right? And its prices are rejecting. It's not rejecting. It's coming down into this line, gets rejected off of it. All right, use some common sense. Don't be trading, 100% mechanical. You're just going to lose. All right, so this would be like a combination of using an indicators, but also understanding markets. Okay. Also on this trade here, for example, you know, you have this level here at 27.95. Price comes right down to it, right? This is, like I said, it's a daily chart. Remember that, you know, these areas, oops. You know, so if you were deciding, oh, you're going to trail this down, look what you're trailing yourself into, okay? So overall, if we add all the pluses and the minuses, we ended up with 313 pips gross. Now, I'm just saying you're trading 5 mini lots. I don't know what your account size is. Doesn't really matter. If you're trading a buck, like one mini, it's $313. If you're trading 5 minis, it's 1,565. Also minus spread. Now my spread is very, very small in the euro US dollar. If you're trading, a standard lot, one standard lot, $10 a pip, that's $3,130. All right. This is from April. And some of these trades you're going to hold for quite a while. Not so much this one. This one, boom, pretty quick. And if you would have trailed, you know, you don't get much better off. So you really need to have a history of trend in the market before you're going to start worrying about trailing. And if you are going to trail, I certainly would not. I would use price more than I would use an indicator. For example, let's just say you're trading this one. Let's say you're going to trail. I look what the price is doing. You know, I see the price pull back. When it rallies above this area here, your stop can go underneath here. Price goes. Now it starts to go into congestion area, right? Put your stop right underneath the congestion area. Right, so what's going to happen? Yeah, you could get faked out. It could kind of pop down below here, stop you out, and then go back around. But you don't know what's going to happen, right? We're trading over on the right side of the chart generally, right? Hard right edge. So anyhow, that's it. This is a free strategy, okay? I got the link below. I'll put it in the blog post. If this video is on YouTube, which it probably will be, it'll be below here. Just grab it. You know, check it out for yourself. Slap it on your Euro US dollar. Just so you know, it does come. The indicators are for NinjaTrader, TradeStation, and MetaTrader. And the training, there's training videos and there's training PDFs. So you and what I'll do is I'll bring it up on my NinjaTrader, what I like to trade off of, and I'll walk through the YM. But for the meantime, check this out. Download it, play with it, and thanks for watching.